Well, let's put the focus then on an HDFC life insurance. The company delivered a stable set of first quarter numbers, and this on the back of growing new business premiums. We spoke to Amitabh Chaudhary, the managing director and CEO at the company, and Vibha Padalkar, the executive director and CFO at HDFC Life. They shared some upcoming partnerships that they have planned and opportunities that they're seeing in the insurance space. Listen into a slice of that conversation.
Well, as HDFC Life and as part of any HDFC company, we've always talked about delivering smooth upward curve, and I think the numbers this quarter continue, and fall in the same kind of trajectory which we keep talking about. So we delivered growth which was much better than the industry across almost every part of our business, either in terms of product or in terms of channels. Secondly, our performance across various matrices, be it Indian GAAP or new business margin or the new business contribution overall, or return on embedded value or return on equity or persistency. I think across all these business matrices we continue to kind of print better numbers. Over and above that, some of the other features that stand out was that our protection share went up from 13 to 18%. For the first time in our history as a company, we assured 1 crore lives in this quarter against 55 lakh lives the first quarter of last year. We also continue to add to our relationship, so both on the bank insurance and the new ecosystem side, our acquisition engine continued to fire. So overall, the numbers were quite solid. Over and above that, I think it's more important to see it in the way that are we continuing to add or build on our foundation of being able to deliver across all our matrices going forward in the future also. And I think this quarter continues to establish that. This time we have given more color in terms of what we have done from a technology front. We believe we are market leaders in terms of how we are thinking and reimagining insurance, how insurance will be sold, how it will be bought, how customers will be surfaced, and and that fact that we are at the forefront is being demonstrated by the kind of acquisitions we are making. We were recently, and I think that we'll be announcing it formally soon, we recently won for the first time, I think from the private sector, a very large PSU bank mandate as a corporate agent. Now the reason we have won that, we believe, because we are able to demonstrate so many of these things to wherever we are bidding for a particular mandate. So from that perspective, I would say laying of the foundation has been very, very satisfactory too.
So as far as gross written premiums are concerned and the APE growth is concerned, what is your outlook there?
Well, we can't talk about our outlook per se because we are not permitted to, but what we have always said, and we maintain that we believe we have the platform to deliver growth which is better than the industry. Industry's growth in the first quarter has been a bit tepid, partly driven by various factors, driven by, I think, factors that might be specific to some companies also. I do expect this growth to come back, and when this growth comes back, we believe we can grow at a pace faster than them.
Ma'am, I'd like to understand from you that the persistency ratio for the 61st month has come down. Any significant factors that have led to it?
So there was a particular cohort that we sold 5 years ago, which started off with a lower 13th month persistency. At that time, its 13th month persistency was 69%. After that, we've been collecting like we have been doing for all other cohorts. But that particular cohort, little that we can do because we started off on a lower footing at a disadvantage. That should soon exit our system, and the future trends of the future 61st month persistency are in line with our expectations, and that should be a better number than what you see right now.
Right. Also, all right. Well, that is the management of HDFC Standard Life. A strong quarter, in fact, a stable quarter coming out from the insurer, and overall seeing an uptick of about 19% in their profit number and their total premium number jumping 37% as well on a year-on-year basis. And keeping it with the earnings theme, then let's put the focus on the tire space. CEAT is a company that saw a sharp spike in trade